All right, hello and welcome back to another market analysis video. I'm Taylor Moe with True Trade LLC, and let's jump right into it. Here's the SPY daily chart. We can see after last week there was a little uncertainty with this potential recapture of the old highs on the Friday, and Trading Company shows up and they bust the market up on Monday, and they send us bullish. So as we can see, we've kind of just gone sideways, eaten time off the clock, and this market looks like it wants to continue going higher to me. There are a few worrying signs that I've seen, diverging markets. We're going to go over all that, but let's just again take this for what it is. This is a weekly breakup candle showing strength in the S&P. We've had, 1, 2, 3, 4, 5, 6, essentially 7 weeks, kind of all within a big range. You could argue maybe it's a little different than that, but you get the idea. We broke up this week. We closed at new all-time highs. It's a breakup candle. It shows strength in the market, and that's all we can say about this SPY chart right now, right? We go down to a smaller chart, and what have we been doing? We've just been going sideways, right? We've just been eating time off the clock. There's nothing bearish about this whatsoever. This chart is saying that we are looking to go higher. So I do want to get into these indices because although, this SPY chart is saying that it wants to go higher right now, there's a couple interesting things that I think we should look at. So let's go to the IWM. These are small caps. These are a risk on, risk off class, right? So money's going into this. Market's doing well. This is a market leading indicator. There's one interesting thing that stands out on this chart to me, and that is the fact that I was keeping my eye on this level. The high of this candle here is obviously a breakdown candle. We know that breakdown candles and breakup candles, they provide some sort of resistance when retested. So we've tested it once, and we're back again. Now, there's two ways you can look at this. We're back a second time, and we've kind of stayed around it. We've actually closed above it a couple times. But on Friday, we actually came back, closed below it. So you could say that's potentially showing weakness. We went up, we hit this gap up here, right on this day, and we rejected it. Okay, that's fair enough. But to me, this is still a market that is not super clear, right? It's fighting this level, but it's hanging around. So to me, that's telling me it still potentially wants to go higher. On the upside on this index, we obviously have this trend line that comes all the way from back here, and we've tested it again, and we're still right here, right? This is still technically a giant bear wedge until we're over the highs, and we have to keep that in mind that there's going to be resistance up here. So we want to keep an eye. If this does get up to this trend line, can it break? That's obviously the bullish signal that we would need to go to new all-time highs in the IWM. And we're still above all the moving averages, so as long as we're above these, this is considered bullish. But it is showing a little bit of weakness, right? Obviously the IWM is not at all-time highs. Is there a reason for that? Why is the IWM not making all-time highs as the S&P has been for the last several months? We don't want to jump too far ahead, but it's always something to keep the awareness of, right? We don't want to just get bearish, but keep the awareness that this has not been making new all-time highs. Money has not been flowing in to risky stocks as much as it has been to the S&P or technology. So what is the reason for that? Something to always keep our mind on. Weekly chart, nothing wrong here at all, right? We've we've gone up, we've come back to retest the breakout area, and we've seen a healthy bounce, and we're now back at the highs. It's nothing but bullish, right? Nothing but bullish on the IWM so far. We are right at these highs. Can we see a little bit of sideways action, pull back before we try to continue higher? Yes, we can. So nothing wrong with the IWM. Transports, again, I said last week that these were worrying me. I said the week before that they were worrying me. They're still sending signs. This market is interesting to me. It's above all the weekly moving averages, sure, but we've talked about this red zone for I don't know how long, right? I've had it up for months and months and months. This red zone is incredibly important. I know this chart is a little bit messy, but just look with me here, right? We had this breakdown candle, right here, this weekly breakdown candle, and this broke basically this whole consolidation range. Boom, closed below it. We quickly recapture it, but the key is until we close weekly back above the high of this candle, which would also mean closing back above the red zone, the DJT is in trouble and could be sending us a warning sign that a bigger top is near. Now that's, it completely depends on how this week's price action plays out, but you can see this week we got back above the moving averages. Thursday we held nicely, but we know we're still in this red zone, and there's a risk of a rejection at this red zone. It's an incredible resistance area that is just not bought at, right? It's just a very big rejection area for the DJT. And so we've done it again. We've got a breakdown candle. I think this is very, very interesting. I think this is definitely something to watch next week. We are below these moving averages. If we don't get sucked back up early next week, if we are hanging around down here in the DJT, I'm really not liking what I'm seeing. I think we could risk going lower. Now, hourly chart, we get a bit clearer picture. Okay, we're in a bit of a range here. So we do have that daily breakdown, but can we maybe just come down to the bottom of this range around this area, 10,800, and continue sideways to push through? Absolutely. So that's something to keep an eye on. If this area right here is holding around 10,800, or are we just sitting down here and bear flagging potentially to go lower or keep projecting? Something to watch early next week. This is the one that's a little bit diverging from other markets. It's sending us weird signals. So again, we need to get over the top of this red zone to really go bullish in the DJT. That would suck us likely up to this next breakdown candle high, all the way up at this gray zone. Maybe potentially trend line, maybe make new highs. But we have to get above the red zone first. Okay. The SMH is another one I have at resistance. It's a pretty tested trend line here. You can see it's been respected. And we're sitting at resistance. So if the SMH doesn't break up here, likely going to see pullback. Now, how far is the pullback going to be? Nobody knows, right? But we tried to get above these highs, just like the IWM. We tried to get above resistance, closed above for 2 days. We barely closed back below on Friday. It doesn't have to mean anything, but it's not bullish. It's more bearish than bullish. We're at resistance. We have a failed breakout. Does it lead to big downside, or does it just lead to a pullback, maybe fill a gap or two, hit the moving averages, and bounce back up? Nobody knows. That's something you have to see in real time. But the fact that we are at resistance here, it gives another reason that we could see downside soon. XLF, you have the same thing. Again, you can't get too bearish because we're above moving averages. We're above these two important levels, which are from the prior all-time highs many years ago. We've been just sitting above and closing above. So I can't say there's anything wrong with this chart. We simply flag, we went to test a former breakout area down here, bounced up, and we're back up here. The one thing I see is this trend line, we're at resistance. If we can bust this trend line, that could be a huge breakout for the XLF. It could be a big breakout because we've been here for so long, but we have to keep in mind, just have the awareness that we're at resistance, that other indices are at resistance, and it doesn't have to be a big drop, but we could start pulling back and then see in real time our important levels being broken. Is it going to lead to something bigger? Okay. XLF weekly, we'll take a look at this. XLF weekly, it looks fine, right? It's a new closing high, right? There's nothing really wrong with it. We're above the moving averages. It looks bullish, right? So again, I'm not going to get bearish on you. I'm just giving you the fact that you have to have an awareness of where we are on the chart and see in real time, especially the DJT, be watching these to get some early week signals next week. And then I want to show you one thing I'm looking at to kind of increase just the awareness. I just noticed in the middle of last week that we were starting to form on the S&P futures a 4-hour rising wedge. Now, you can go up in this rising wedge for a long time. So again, no reason to necessarily get bearish, but I think it's something to watch and just be aware of. I was aware of it on Friday. Many people were like, "Oh, like we're gapping up, right? A huge bullish day." And I was like, "Well, not so fast. I'm seeing this." And we did end up having a nice pullback, almost hitting the bottom of the wedge. And we had a nice bounce, which I don't know. I don't know what really to think about this. As far as I'm concerned, you've got a big demand zone right here, a big supply zone right here. All right, you had this breakdown candle. You can see the resistance there. You can see, boom, goes up, breaks the resistance, taps that trend line, tries to hold the level and back down. So whenever something is going sideways and then it ends up breaking down, right? You're in a bull flag or bull pullback and you end up breaking down, that's a big supply zone. That means sellers are heavy at this level. So this level from about 33, 80, 81 up to these highs right here, 33.85, that's very strong resistance on the S&P futures right now. And that's a level to be watching if we're going to get over. Are we going to bust over this rising wedge and go for a blow off top? I'm not thinking so right now. If that happens, then we'll switch. We'll switch on a dime, right? You have to follow the market. You have to follow the market. When you know you're wrong, you move on, you switch sides, so you don't get bogged up in taking huge losses, right? You have to be able to switch sides with the market when it tells you that you're wrong, okay? But yeah, what I'm seeing, I want to watch this Sunday night or Monday, whenever futures are open. Monday is a holiday, so there's going to be no market. 4-day week next week. But this is the level I'm going to be watching on the ES, on the S&P futures. And on the downside, right, obviously we want to be watching if this breaks, and then we have a massive zone here, right, that was created these pivots. We broke, retest, so clearly an important area. Could you maybe move it a little lower too? Yeah, maybe down here somewhere. It's a rather big zone. So those are the things that I am watching. And real quick, I just want to highlight one sector real quick. The XLU has currently broken out of another bull flag. I mean, look at this insanity on the XLU. We have this kind of bullish flaggish formation, right? We had a little downtrend, starts coming up and making flags, and boom, it just busts out. And I mean, this sector has been so hot, and we've gotten above, right? This, look at this, right? Long-term trend line, and look at that, just holding, breaks up. So these stocks are looking really, really good to go higher, right? And maybe you already missed some of the boat, but look for another setup, right? This thing should continue flying. Looks insane. I mean, I'll also highlight real estate. Real estate has just been, I mean, if you guys go through these sectors, go look up the 11 sectors of the market, right? Write down their ETFs, right? I have them written down right here on my computer. You just look at these ETFs, right? Look at the XLC communications, look at the industrials, right? Look at tech, and just map them out and look for setups in these sectors, and then you just look through stocks in these sectors, find setups, find things that are going to move. I mean, look at AMT. This is in real estate, right? Look at EQR. This is in real estate. Look at DUK. This was in the utilities, right? Look at these incredible plays that you can find just by finding those hot sectors. That's all you have to do. Rotate your money to these big sectors that are moving. Just find the setups, right? It wasn't that hard here, right? You have a breakout, you have a pullback to the 20, and boom, you break the highs, and you look for setups that are going to go with it. It's pretty simple. It doesn't take a lot of hard analysis. It doesn't take too much thinking, right? You're simply just finding hot sectors and following the big money into those sectors as they take off, right? Not every sector is always going to be hot. Don't try to always focus on tech just because it's liquid and there's tons of people trading in, it's volatile, right? Just find what's hot, find what's moving. This is easy money right now. Easy money. So that's going to be it. Hopefully this helped you guys out. Please drop the like. I'm going to try to be doing more videos, more educational stuff soon. I've just been really busy. So yeah, that's going to be it. Thanks for watching, guys. I'll see you in the next one. Peace.